Hello, everyone. Chad Kroger here, your purpose driven lender. And I hope you had a wonderful Christmas and New Year's season, holiday season for whatever activities you might have partaken in. And I hope your health is well and just life is moving forward positively in 2022. I wanted to share with you updated economic information and observations that are currently active in the marketplace. The first one is that we know the Federal Reserve is going to raise interest rates that they control in 2022, and we're expecting that first one to occur probably in March, most likely. They might do it in February, we'll see. And those three things that they control are what we call the Fed rate, the prime rate, and the discount rate. So Fed, prime, discount. All three of those are controlled by the Federal Reserve, and they affect the rates that banks charge each other for borrowing money and also for goods and services, auto loans, credit cards, personal loans, business loans, all those types of things that the consumer uses at the street level. So if those rates go up from the Federal Reserve, you'll see a trickle-down effect to those things that I described, and those rates will go up. What happens then is investment conglomerates will then pivot and they'll say, hey, we're getting a better return if we shift our money into these types of investments that are providing higher rates. And so to make mortgage-backed securities more appealing to investors, they are going to have to raise those interest rates. So it creates an inverse effect, which in turn raises mortgage rates. So be watching for that. We are anticipating that mortgage rates will probably trickle up into the high threes by the middle to late spring. We may even get there sooner. But we're not expecting it to go into the fours, probably going to hang out in those high threes for a while. There are some indications long-term through 2022, we might see rates come back down into the mid and low threes. Who knows? We'll keep an eye on it and we'll continue to keep you updated as we move through the year. So one other key piece that I want you to be aware of is just on a local level, Oregon typically has always lagged behind the national numbers in regards to whatever is happening economically. The good news is that in 2021, Oregon's unemployment rate performed better as a whole than the national numbers, and Oregon recovered much more quickly than the national average, which is boding well for the economy going forward in 2022. Right now, unemployment stands at a measurement in Oregon of 4.1% in general. Central Oregon's doing well. Southern Oregon is doing relatively well. The Portland metro area is doing great. The key piece, obviously, is we're all seeing signs out there that say now hiring or looking for, apply today. The piece that hit with COVID is that many workers made one of two decisions. Either they said, I'm done working and I'm going to take early retirement, or I'm just going to go to part-time, things like that. Or they said, what do I really want from a job? And they quit. And they're looking and trying to decide what is it that they want to do with the next chapter of their life post-COVID in the work world. And so I believe there are a lot of workers who are still on the sidelines trying to figure out, or they've made life changes and they're just taking part-time jobs, or they've retired and just moved on from the workforce entirely. So it will be interesting to see how that plays out in the coming year. Hopefully we'll stop seeing less of those signs out there of now hiring, apply today, etc., which I think will be a strong indication of the economy stabilizing going forward. The last piece that I want to mention is obviously inflation is very high. And to fight inflation, rates have to go up. So we're seeing the cost of goods going up, gas, food, services, that trickle down effect is affecting the wallets of every American. And so hopefully the Fed will get that in check sooner than later. But what I want you to do is take a look at the document that I'm attaching to this video and review that information so that you're prepared to make good decisions in the coming year, whether it's in investments, housing, whatever. And then reach out with any questions after you reviewed that information. Have a great January, and we'll look forward to speaking with you soon.